Good day, fellow investors. We discussed this video how value investors miss on huge Nvidia opportunities, and there were great comments really discussing how value investors approach long-term compounding and investing, and I wanted to share these comments because this is really becoming a value investment community, and therefore I thank you for those value investing comments in a world of YOLO investing. The first great comment is, value investors are dumb. Yes, we are and will always be, and that makes us happy. From 1999 to about 2007, everyone I knew told me I was dumb for buying Berkshire. Of course, you had to buy real estate then. From 2020 to present day, those same people tell me I was lucky I was able to buy Berkshire before 2007. That's value investing. People will say you're a fool while you accumulate, and when you harvest, they will tell you that you were lucky. I'm sure same will be said about my position in Tencent in about 10 years or so. And I was also lucky to invest in 2002, 2009, 2010, 2015, 2020. Again, a great comment here. We value investors look dumb most of the time for not joining the party. When the party comes to an end and we finally are proven right, nobody cares anymore because everyone will have left the party being depressed. And this is a great comment here because I remember the 2005 to 2010 situation on my local stock market. I was investing here on Croatian stock market exchange. I started here, I made great returns still here, and then I sold already here. I missed on the upside for another year, another 40-50%, and the thing is that here we had a forum. At the times you had forums, and anytime you would log in, there would be 2,000 people active on the forum. This is 4 million people country, so it was a lot. What happened is that when I would log in here, the number of active people on the forum was 20, and people were still using forums in 2009, 2010. This is what the destruction created. Everyone is a genius here, everyone disappears here. If I put that into the current market context, everyone is a genius here, we'll see whether everyone will disappear there. And you can see here on this comment, John immediately says, you nailed it, most of the time you're wrong as value investors, too clever for your own good. And that was simply hilarious because we are now here. See you later, alligator. The next component is risk. If you look at value investing, the key of it is risk. It's not return alone that matters, it's how you get to that return. And the question is, what risk do you have to bear to achieve a return? And that answer is not even questioned until the tides change, and then it will be too late to answer. Sure, I missed out on some gains, but I also dodged as many, if not more, stocks that went down 80-90% of the time. That is half success right there. I know a guy who promises to double your money on fruit poker overnight. If he really manages to pull it off, was I stupid for not taking that risk? I don't think so. So really great comments. Some have enough money and want to keep it. There is no need for crazy returns. So just slow and steady compounding over time. Value investors miss on speculation voluntarily in order to miss on undue risks. Does it mean you can't make money by speculating? No, but game selection is as important as gameplay. You don't have to try to make money on everything. Dividends are easier from a psychological perspective. You sleep better even if the market trades against you. And perhaps here the key also, growth is a key element of value investing, so we always look for both. Give me a company that has long-term growth prospects that is trading at a reasonable or low valuation. If you're patient, you get it. If people are putting more money into a stock just because they believe the price will go up, they aren't investing, they are gambling. It's important to know the difference between gambling and investing. here Boom Shakalakala says that when you're investing or gambling, blue chip stocks go to nothing too and pay dividends for 50 years and cut it like Walgreens. And this is a great example, and this is Walgreens stock. So it boomed and then it returned. But this is 50, 40 years. And if you look at the payouts, so already in 2016, if you bought in 85, you were making 150% per year on your initial investment. That is something, and that is something that you accumulate those 20, 30 years when the times are good. If you can get out when the times are great, even better, maybe not now, but that is something that people don't understand. Also, the process of compounding. Maybe you got a dividend here, you invested it in Apple, and the rest is history. And then here was a great comment how we are also speculators as value investors. You buy low, not the hype, and then sell it with profit, hopefully in search for another. That's just partially correct. We buy to own businesses, and even if the profits that don't come, we are happy with that. If the profits come and the market rewards me somewhere in the future, even better, but that's not the main focus. That's just a positive upside as long as I am rewarded from the business value creation. And there were great comments on the growth side of things and the index boom. Here, the great reason for holding Nvidia for long is every household will have a PC and every PC will have an Nvidia chip running. Then major role in robotics, hardware company, software company, SAP for robotics, quantum computing will make the change. Good luck, I will not fight it. Guys, just buy an ETF and sleep well. Well, now the world ETF at a P ratio of 11 is not just a bad idea. However, why are you watching investing videos if you're just doing this? We try to do better, and there is no point in fighting this. Further, on that market, on that growth, everyone is calling me a loser. 10 to 15% per year and I'm a loser because someone made 30% last year, perhaps a value investor. We also did good last year, but that's just 1 year. We want to compound long term. They say Sven is not value investing, he's value trap investing, and there was we always underperform the market. As said, 10 to 15% per year, and I'm the underperformer, the loser, and things like that. That's my life. I'm happy. That's the audience on YouTube. Someone here said it's better that we don't convince others because they will make our lives as value investors much different. And then here it seems that we have two different audience on YouTube. One is Gen Z crypto dudes who want to get rich ASAP. The other is Gen Z investors who want long-term opportunities. Don't waste much time on reckless traders. Okay, yep. Value investing for life, subscribe, and I'll see you in the next video.